All right, welcome back into the channel. So in this video, I am going to be continuing question 3 of the November 2024 Eastern Cape Paper 1 Accounting Exam for grade 11. So if you want to check out 3.1 or maybe you want to check out question 2 or some of the previous questions, please make sure that you go into the playlist right in the description and you will find everything that you're looking for. Before we get started with the video, please make sure that you subscribe, like the video, and at the end of the video, if you have anything to say, please make sure that you engage with us in the comments. Say to us what you want us to cover next, what questions did you have, and we shall be of assistance right away. So without further much to do, let's get to 3.2 and get this thing going. This is question 2, and as you can see, we got Beco Traders. It says the following information was extracted from the accounting records of Beco Traders. The store is owned by Ben and Colleen, so combination of makes it Beco, I guess. So it says prepare the current account note as it would appear in the notes to the financial statements for the year ended 30th of September 2024. All right, that's cool. And it's not a very difficult question. What I'm going to pull here is I'm going to take this answer sheet because I don't want to constantly keep referring to it because it has quite a few amounts and it kind of has already a structure that is somewhat recommended, I would say. Because with these current accounts, one of the things that you just need to be cognizant of is the fact that the structure may be done a bit differently, and you just need to find a way to be flexible with whatever structure that is being used in the question that you're doing. So I'm going to start here, current account, and I'm just going to highlight some of the things that are very important for you to know. So basically, when we do the current account, essentially what we're looking at two ways. So we're looking at distribution of the profit that the partnership has made. And then that profit, how does it get distributed? Now, that profit gets distributed in two sort of ways. We have the primary distribution and then we have the secondary distribution. As you can see here, this is the secondary distribution. And then we also have the primary distribution. Now, what makes up primary distribution? What makes up primary distribution is your partner's salaries, your bonuses, your interest on capital, basically what each partner is entitled to as part of this partnership. And then once the profits pay whatever that needs to be paid when it comes to the primary distribution, then the next thing that we have to look at is, well, from the profit that remaining, that's when we're going to use that remaining profit to then do a secondary distribution of profits, and that will be using a pre-agreed ratio that is in the partnership agreement, and the information is going to be very clear about that. All right, so let's start now and see. So the first thing that we got that we need to work out is the partners' salaries. So we got our partners' salaries. Okay, so we got our partners, we got Ben, and then we got Colleen. Colleen, like that. Okay, so we got our partners' salaries, we got our bonuses, and then we got our interest on capital. So this is the primary way in which profits are distributed between the partners. So let's start there then and see these salaries of partners and then fill out the information as required. With the bonus, we already know that we got 15,300 for Ben. So let's do it for both the partners so that we can make sure that we have something complete at the end of the day. Okay, so let's go to find the information. So let's see. So partnership agreement, there's this additional information that may be relevant, whatever the case is. But let's start here with the partnership agreement, some of the things that have been agreed on. So partner salaries, it says Ben is earning 8,500 monthly, and then Colleen is earning 8% less than Ben. So let me start with Ben then. So the way in which we calculate Ben's salary, we're going to say, well, it's going to be 8,500 multiplied by 12. And then we know that Colleen earns 8% less than that. So we're going to say, well, 8,500 times 12. So if they earn 8% less than that, that means that they earn 92% because you said take 100%, subtract 8%. So they earn 92% of what Ben is making. So I'll multiply by 92% there after I've multiplied by 12. So that works out to 93,840. Okay, cool. So we got our partner salaries. Next, we got the bonuses. Let's see. The bonuses. It says bonus only Ben is entitled to receive a bonus of 15,300 at the end of the financial year. So only one person is entitled to a bonus. So we can just as well put 0 in there for the bonus of the other party. All right, next we got the interest on capital. So our interest on capital, what do they say about it? It says that it is calculated 15% per annum, and it says note information B. All right, because obviously we need this 15%, but then we need to know, well, what was the capital at the beginning, during, and at the end, and that kind of stuff. So what does it say here? So let's see. So we got A, which has given us these capital balances, 30th of September 2024. Let's have a look at the information given here. So firstly, it says that Ben decreased his capital contribution by 40,000 on 31 May 2024, and then says this was recorded in their books. So the fact that it is recorded, it means that this 160,000 has already subtracted the 40,000 that was decreased in terms of the capital contribution. So in other words, when the year started, the capital contribution of Ben would have been 200,000. So let's do then our timeline. So from the start of the year, which would be 1 October 2023, until 31 May 2024, then during that period, then in that case, the capital would have been 200,000. So Ben capital. So we're gonna work out from 1 October 2023 and work out up until 31 May of 2024. And then after that, you're going to work out from 1 June 2024. And then we're going to work that out until the 30th of September 2024. All right, cool. So let's see. So how many months is that? So I got October, November, December, January, February, March, April, May. So that's 8 months. And then the last month is going to be June, July, August, September. So that's 4 months. So how are we going to calculate? Well, the balance of the capital during that period before 31 May would have been 200,000, and then multiply by 15% because that's your interest on capital, and then we multiply by 8 over 12. So that would be the interest on capital calculated for those dates. And then after that, there was a decrease in the capital that we have. So now the decrease, it decreased by 40,000, and then it went to now be 160,000. So now we're going to say 160,000 times 15% and then times 4 over 12. That gives us 8,000. And so if you add up these, you'll see that for interest on capital in respect of Ben, we have 28,000. Okay. Then the next interest on capital that we need to work out is that one of Colleen. So Colleen, 190,000 is given. Let's look at this information quickly. So there's no information. Number one, doesn't say that she changed her capital, but it says Colleen returned merchandise that was not suitable for his personal use before stock taking was completed. The cost price was 750. No entry was made in the books. Okay, this has to do with drawings rather than drawings in terms of if you draw some stock from the business, then in that case it would be a drawing, which we consider last. So we'll get to that point. So then the balance of Colleen would have been 190,000 from beginning of the financial year and to the end of it. So then it would be pretty straightforward for Colleen because we take the 190,000 multiply by 15% times 12 over 12, which is just times 1, so it won't change much. And so that basically gives us the interest on capital. Now that we've considered all these things, the next line item, very important line item that we need to look at is that this then represents the primary distribution of profit. So this is the primary distribution. Okay, cool. Now, the other thing I'm going to do here is that I'm just going to add a total column. And, you don't have to if it's not asked, but I'm just doing it just in case. So, okay. Okay, there you go, 145. And then the total is the 267, 640. Okay, cool. So now we got the primary distribution of the profits. Now the question is, well, how much is the profit itself to see maybe if we're given any sort of profit? Well, let's see. It says the remaining profit or losses are shared between Colleen in the ratio 3 to 2 respectively. And then it says that Colleen's secondary distribution amounted to 23,980. Now, normally what we do to work out the secondary distribution of profits, we would take total profit and loss made, which is a question mark here, and then we would subtract the total of our primary distribution of profits, and then after that would apply the ratio. But in this case, we haven't been given the amount of profit that is there, but we know that Colleen has a distribution of 23,980. And we know that in order to work out Colleen's distribution, what do? We say we would take profit, then multiply by, because it's 3 to 2 and Ben gets 3, so we would have said the total ratio is 5, so we would have said 2 over 5. So we would have said remaining profit, so this is profit after subtracting primary distribution. So remaining profit multiplied by 2 over 5, and that remaining profit would then give us a share of this guy, which is 23,980. So with this, then you can be able to work out what the remaining profit is, because to work out the remaining profit just means that we have to do a simple maths thing, right? Because we multiply them by 2 over 5, we can basically multiply both sides by 5 over 2. Now, if you multiply by 5 over 2 on one side, you're just going to be left with remaining profit. You're going to remain with remaining profit, and our remaining profit is going to be equal to, well, on the other side, we need to also multiply by 5 over 2. So we're going to say 23,980 multiplied by 5 over 2. So that then would give us what those profits are, the remaining profit, so to say. So the remaining profit is 59,950. That basically gives you your total then, because this is how much you're distributing. So you might as well put it in that column, and then the difference is basically what goes into the other partner, which is 35,970. An alternative way to calculate this would be to take that 59,950 multiplied by 3 over 5. And you will see that it's going to give us that exact 35,970, as you can see. So that would be the secondary distribution, which you can also call the final distribution. So secondary distribution of these profits. All right. cool. So then after that, there's this. So then after that, we then would add up everything between primary and secondary, and adding your primary and secondary distribution actually gives you your net profit that you made for the year. So if the question asks for the net profit, you'd pretty much add up your primary distribution along with your secondary distribution. So then ultimately the profit that this business had made this year was 327,590. So that would be that line item that was left there. And then after that, we're going to have drawings. Okay, now when it comes to the drawings, we have to be very careful when we're dealing with the drawings relating specifically to Colleen, because there was this information that was touching directly on those drawings, because we know there was something there. But when it comes to the drawings of Ben, it's pretty straightforward, 119,600. And then just remember that these drawings need to be negative. Now let's go to the drawings of the second partner. So it says here that he retained merchandise that he had taken for personal use. So basically then he had, before that you'd have had drawings, and it says no entry was made in the books. So then in that case, because he's returning the stuff, we're going to have to subtract his drawing. So it's going to be 105,550 minus. So we're going to say it's going to be 105,550 minus the 750. Okay, obviously this is, we want to make sure we put it as a negative. I'm just going to put in brackets and put a negative in front of it. And so there it is, 104,800, okay? And so our drawings in total work out to 224,400, okay? Cool. And then after that, we then would look at retained earnings, because basically what happened, we made this much, so each partner has this much share in the whole profit made, and then they basically retained some of this money. So then our retained earnings, what did we retain from this year's profit? So the retained earnings from this year's profit is going to be 181,270 minus 119,600, and the same is going to apply for the next partner as well. So basically then that means that from this year's profits versus the drawings that each partner made, they've managed to retain 61,000 for one partner, another partner 41,000, but in total they've retained 103,090. All right, and then after that we go with the balance at the beginning. So what was the balance at the beginning for each of these parties? So current account at the beginning, you can see that it's a debit for Ben, which is a negative 13,500. So minus 13,500. And then for the other partner, it is positive 29,000. So 29,000 positive. All right, cool. And then after that, we have then the balance at the end. So the balance at the end is going to be, just make a bigger border. So there is the balance at the end. We're going to say 61,000, which is the retained earnings for the current year, and then add that to the balance that was there at the beginning. That works out to 48,170 for one partner, and then for the next partner, and then there you go. So that would be the current account for Ben and Colleen. So hopefully it is clear, and it is something that you need to be very, very comfortable with when you're doing the grade 11 accounting, because it will definitely be there in the questions. All right. So yeah, so we've basically finished now. Question 3. So stay tuned or check the playlist to see question 4. And I will see you on the next video. Please make sure that you comment everything and make sure that you've subscribed, like the video, and then share with everyone that may need this help. Until then, I'll see you next time.